Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, August 6th, and we got just a couple economic news, kind of minor ones. We'll start off with the CoreLogic Home Price Index for the month of June. And according to the index, we had 11.9% growth in May, and basically that trend continued in June. So that means basically year over year, the appreciation grew, or home prices went up approximately 11.9% from the previous June, and then of course 11.9 from previous May. So that's basically what that means. So the trend, the home prices are still going up, which is a good sign there. And then also, very minor here, but it's the trade deficit. We had a 45 billion, trade deficit for the month of May, and the forecast was supposed to taper down a little bit to 43, and it jumped all the way back to 34.2. So awesome numbers right there that we show quite a bit of a reduction in our trade deficit. And then also we have job openings for the month of June. We had 3.91 million back in May, and came up at basically 3.94. So more job openings are being created in the month of June. So obviously a good sign. So more job openings will hopefully lead to more people being hired, and more people being hired will hopefully people start buying and the economy kind of get on its way. So let's go ahead and take a look at the technicals here with the headline news. We have the stock market right now is down. So what's really driving the day is, for the bond market as well as the stock market is right here. We got two Fed members, Evans and Lockhart, speaking today on asset tapering. So remember yesterday, Lockhart was out of, or Fisher, excuse me, from Dallas. He's kind of what they call a hawk, and he was kind of speaking about asset tapering. So they kind of listened, but they kind of took it more with a grain of salt, because basically the difference between a hawk and a dove in these contexts is primarily a dove is somebody who is more concerned about growth, economic growth, as well as employment, where somebody who's a hawk is going to be more concerned about curbing inflation. So him being somebody who's curbing inflation would want to be pulling back on the assets, because the purchases of these assets basically create inflationary actions. But you got guys like Evans and Lockhart, or especially Evans, who's viewed as very uber dove, and basically even he has been saying that the economy is moving in the right direction, and to be expecting tapering off on the kind of easing this year. So of course they're all kind of, the investors are pulling back and kind of listening as to what they're saying, and kind of now probably re-evaluating what they're going to be doing, if where the market should be in terms of the bond market as well as the stock market. What does this mean? So be prepared for some volatility in the near future here as they reassess where the market's at and where they view the market maybe should be at. So let's go ahead and take a look at the bond market. And right now we're down about 19 basis points for the day. So, so we started the day off at the same 100.78. So we obviously had a price for the worst. So the pricing has worsened today. So rates are slightly higher today. We're gonna probably, like I said, remain in that same range right there. Kind of go mostly in a sideways pattern. This week is very light in terms of economic news releases, but obviously this Fed speak is going to kind of roil the markets a little bit, and it could, that would be seem to be the big news so far this week. Watch for the weekly jobless claims coming out on Thursday, so that could play a little bit of factor, especially when we just saw job openings being created here. We'll have to kind of wait and see. All right, folks, thanks for watching. Stay tuned for tomorrow, and we will hopefully, thanks for watching, and and we'll see you guys tomorrow.